Hi there, welcome to Grain TV. It's Monday, June 27th, and it was a wild day in global markets overall, but especially in soybeans, where we finished the day up 33 cents a bushel. Let's take a look at Grain Hedges trading platform and see where we closed out. In corn, up a penny and a quarter, not much movement here. Wheat was off 7 3/4, continuing to find pressure from harvest, and soybeans in particular, as we talked about, gaining 33 cents, reversing pretty much all of Friday's losses. Last week, after the Brexit announcement, that certainly got the grains really shooting lower. At the end of the day on Friday, we did see some recovery mode in corn and wheat. Beans did not follow in that trajectory. So some of this action in beans today may just be continuation from sort of the corrective phase of that first pulse down. You know, the Brexit news continues to dominate global markets. We saw some big moves yet again on Monday's trade after Friday's big moves as well. You know, the British sterling pound is still sharply lower, losing 11% in the last two trade sessions. Equities were off another 1.5% today. Crude oil off almost $2 a barrel, while the U.S. dollar was up nearly 1%. So overall, we're still feeling the effects of the British exit from the EU. Turning now to sort of more ag-related news, the temperature and weather forecast looks more favorable as we move into the critical pollination stage for corn. We are seeing forecasts for normal to below normal temperatures in much of the Midwest in the next few weeks, as well as better than normal precipitation coming into the post-July 4th holiday weekend. So especially in the next week, we should see some rains of 1 to 3 inches probably in Kansas, Nebraska, and into Missouri and parts of Iowa. So that is really sort of dogging the grain markets right now, as the weather looks fairly favorable for grain production at this early stage of development. Other things on the weather forecast, we saw the El Nino index actually get close to a point where it will be now called a La Nina. We're only 1/10 of a centimeter away from that index turning to a La Nina. That would be really early for what most weather forecasters were talking about 2 to 3 months ago, where they talked about the La Nina event not showing up until we got into late summer or early fall. But as this reading suggests, we are really close to it right now on June 27th. Other news, USDA flash sales were positive for soybeans today. We had an announcement of a 150,000 metric ton deal, most of that being in old crop beans, 132,000 being done on old crop. Speaking of exports, let's take a look at export inspections for the week. Overall, it was nothing really to get excited about other than corn, which had a really good week, coming in at just over 1.4 million metric tons versus expectations of 0.9 to 1.2 million metric tons. Beans and wheat were within trade expectations, so again, nothing to write home about there. If we look at our export scorecard for the marketing year, in the case of corn and beans, we're talking about old crop corn and beans. You know, we've had some revisions higher by USDA in the last few reports, and so, you know, we still have a pretty good distance between where we're at today versus where we need to be by the end of the year. If we look at corn in particular, USDA is only expecting a 2% drop in year-on-year exports, but right now our actual export pace is trailing it by 5.7. Likewise in beans, USDA pegging it at only a 4% drop year-on-year in exports, and right now our pace based on export inspections is only 7.6. So, you know, there's some room here that we still need to cover in terms of exports, and I think that can be negative if we don't see our exports start to pick up here. Other news out today from USDA after the market closed, we got the crop progress numbers. These numbers were a bit of a surprise for corn. People were looking for about a 2% drop in crop ratings because of some of the heat and stress that the crop got in the last few weeks. And overall, USDA says the good to excellent category was unchanged at 75% from last week. And again, traders expected about a 2% drop. So will that be pressure on the market when we open up Monday night? Soybeans dipped a little bit, going from 73 to 72%. Wheat harvest in winter wheat territory was very strong, jumping to 45%. So overall, you know, this is a market that seems to be looking at weather that is fairly positive for crop development. You know, we had the first signs of silking coming out with the corn crop, about 6% silk. So, you know, the next few weeks are going to be critical for weather. And when we look at the weather forecast, they overall look pretty favorable for crop development. But of course, weather forecasts are known to be wrong. Let's take a look at the longer term charts here in new crop beans and new crop corn. And in particular, we have come below the 20-day moving average, not only in beans but in corn as well. We've been on a steady upward sloping curve since March 1, and for the first time in that 3.5-month period, we're finally below it. And you can see we tried to rally back here today, gaining 33 cents, but we're still below that 20-day moving average. In the case of corn, we are well below it, shattering it last week, thanks to the big move down on Tuesday and continuing down for the rest of the week. So, overall, these are markets that are really starting to feel pressure, really starting to change course. What was once a upward trending market with some bit of correction now seems to be changing sentiment to more of a downward bias. And again, the weather forecasts look to be pointing to really good crop production potential coming down the pipe. That's all we got today on Grain TV. As always, visit us online at grainhedge.com to learn how you can get a trading account with us and do your own marketing and trading through Grain Hedge's trading platform. As a Grain Hedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.